What up, everybody? Welcome to another class full of gems here at SMC. Today's class is fire, is jam-packed with some fire demonstrations that can definitely improve your accuracy as a trader. That's whether you're a swing trader, a scalper, a day trader, you're all going to benefit from this demonstration. So I think you definitely want to stay to the end. And then in the middle of class, I'm going to go through the chart debate. We had a really good one. I have 4 different arrows in that picture. Which one is the right arrow? I'm going to put you on. And then, of course, we're going to end with what are my predictions for the future, right? What do I think is going to happen in the market in this upcoming week? This is the week of May 4th. Okay, so jam-packed class, definitely stick to the end. And with that being said, let's get right into it. My people. All right, so let's look at this. This is the beginning of last week. This is Monday where we're picking up. The market's about to open, and this is what you see right here. This is the hourly chart. The left side of my chart is the NASDAQ, which is the equivalent to QQQ. That's the options, people. All right. And then this is ES on the right side, which is the equivalent to the S&P 500. That's your SPY for my options traders. All right. So even when I trade futures, even when I'm trading options, I still chart on my futures charts, just so you guys know. But anyways, if you were looking at this chart, you probably say, hey, I think price is going to run these highs. I think it looks pretty obvious. We've been in the uptrend, right? We clearly been in the uptrend. After a higher high comes a higher low. After a higher high comes a higher low. And then what comes after a higher low? A higher high. So you would think that we're about to make a higher high here. So these highs are not just any standard higher high. They're actually last week's highs. And something we like to look at is definitely last week's highs. Running previous week highs there's definitely a strong pool of liquidity there. So you could get some pretty nice trade setups off of something like that. So I like to know where previous week highs are. So as you can see here, I wrote it. I marked it off on the S&P. I also marked it off on the NASDAQ. Copy. Now let's go ahead and try to push into market open. All right. So we have a level up top, and then we'll see what price wants to do with that. So right now it says 9:10, right? The market has not opened yet. It opens at 9:30. Let's go ahead and get over there to around 9:30-ish, 9:23. All right, cool. So we got 9:28 and then 9:29, 9:30. Copy. All right, 9:30 comes in, strong push to the upside. I think we all know what's coming next, right? We want to run the yellow line. Let me pull up the 1 minute on ES as well. So what do you notice so far? Do y'all notice what ES did so far? ES ran the yellow line and NASDAQ didn't. Every time you see a difference in between what these tickers are doing, you want to note that divergence, like Alphonse said in the chat. You want to note that divergence because typically you want to see them relatively around the same time running the same liquidity pools. So being that these are previous week highs, you want to see if NASDAQ and the SP 500 are both running previous week highs at the same time. So if one does it and the other one does not do it, and then you notice maybe a fair value gap or something in the opposite direction showing aggression in the opposite direction, then you definitely want to look into taking a play. So what I'm saying is notice that the S&P runs it and the NASDAQ potentially might fall short. But if you notice they fall short and price drops aggressively, whatever your bearish confirmation signals are, for me, I know what I like to look for when I'm looking at bearishness. You might want to look into taking a play. So right now my eyes are peeled and I'm like, okay, I think there may be a potential divergence here. So I'm now well, not exactly at this moment because NASDAQ looks like it's moving up. But if I notice NASDAQ stop moving up, then my antennas pop out of my head like, oh shoot, y'all, something about to happen. All right, so you see NASDAQ slowing down a little bit. Dang, what's this? Okay. We ran these previous highs on the, notice I'm on a 15-second now. I'm on a 15-second on the NASDAQ on the left side, right? I'm like, yo, dang, we ran these highs and we didn't continue. That's strange. What are we coming back inside this range for? All right, let's see. Are we starting to go bearish? I don't know. Oh, snap. This looks like the beginning of a bearish fair value gap. Yo, you know what? Why not? It's a low risk play. My stop loss would be based on if I get in right here. We got a fair value gap up top. We're potentially about to make another one. Let's see if we make it. Oh no, we didn't make it. My fault. No, because I'm actually trying to show you guys a play that I took on live. I guess maybe I didn't enter right here when I took it on live. I feel like I entered after we made a fair value gap. Let me see. Hopefully we made a fair value to the downside. All right, this might be when I got in. So that's fine. Look, this is where I got in then. My bad, y'all. Because I know there's a fair value gap. I wanted to base it on this one. Boom. I'm like, all right, if we hold this fair value gap right here, then I'm actually interested in shorts. So this is where I got in when I was on live around this area. My stop loss can be based on the fair value gap. I put it slightly above. I'm noticing the divergence. You see ES is starting to come back down too. So I'm like, oh, okay, this might be a nice play to the downside. And let's see what we target. We could target some lows down here. I think it looks really good. You know what I forgot to show y'all though, real quick. So believe it or not, I'm actually gonna rewind because I want to show y'all something. You always want to play in your trades, right? So what I said prior to the market even opening, I forgot to say this part, my bad, is I'm looking for price to either fall short, of course, like it was doing, or sweep the yellow line and then come down. And the reason why I'm looking for price to come back down is because I noticed that into market open, we did something called engineered liquidity. We had a higher low, we had a higher low, we had a higher low. We can make a trend line out of this, but we look at that as smart money traders as something that price can take out in a straight line. So we're looking to run that liquidity basically. We're not looking for that to hold in the market. And so I noticed that they engineered before market open, and then look at my bad. And then look at the move up. How many times I tell you about these moves up that have no fair value gap? So look at the 5 minute. It's really choppy. This is a really steady, choppy type of move to the upside. Like, don't just look at direction. Look at the way that price is moving in that direction. Everybody says, "Oh, it's going up though, Rel." Yes, okay, but the signs are in how it is going up. So the way it's going up is not favorable. You can say the same thing about this whole section. And what do I notice right below it? I do notice a fair value gap that prices never visited yet. So I marked it on the screen. And this is literally my setup before that live trade on Monday. This was my setup. I was like, hey, I'm looking for some type of potential reversal around here or right where it's at, either way, to take out this whole pool of liquidity and tap into the purple area. All right, so we have a downside plan before this even occurred. All right, so I meant to say that. My apologies. Let's get back to that time frame and then get into the entry, which should be coming up. Which should be, this is where it was at, right? I'm pretty sure. Okay, so let's just say we got it like right here, and then I bet. So things look good, people. You know, I love this play. We about to, man, I'm telling you right now, I'm hyped. We about to make a bag, y'all. Let's get it. I'm hyped. Who's trying to make some money? Y'all ready? Everybody, you ready to make money? Let's go. Clap your hands. Let's go. Make some money. Let's get some money. Let's get some money. Let's go. Let's go. Let's go. All right, it's going well. I love this. Dang, we up. We up. David said he always ready to make money. Me too. Me too. Let's work. All right, so things are going well. To me, I really don't want price coming back to this fair value gap. So like my stop loss is above here at the moment, but like technically I really can make it break even in real life. And this is something I told people on the live trade at this moment. I said, yo, to be honest, y'all, we don't really want price coming back to this fair value gap up top. And so, you know, if anything, I don't want to come past this purple fair value gap that I just drew. I don't want to come back. So like you're really like free at this point to put a break even. For me, because I looked at it and I said, honestly, I'm only risking a small amount of points. It's like about 13 points or so. I'm like, all right, you know what? I'm gonna leave my stop where it's at. Okay, I'm gonna leave my stop where it's at. But the signs, though, the signs are there. Copy. Let's keep it moving. We know where our stop is at. Let's keep it moving. Things going well. Yeah, we about to get paid. What y'all about to buy with y'all profits? Anybody? What y'all about to buy? We about to get paid. It's lit. Wait, hold up. What they doing? Oh, come on. Don't do this now. Don't do this to me, please. Q say he gonna buy freedom. What you buying? Okay, things are going well. Thank God. I got nervous. We about to be at the target, y'all. Target about to get hit. David say he gonna buy a membership to BTSMC. Invaluable. Oh, heck nah. This ain't one of them things. I thought, man, I just texted my moms and told her I'm about to get out the HUD. What's going on? Oh my God. Oh Lord. Man, don't do this. Oh, come on, bro. Like I thought this was the one. You know, man. Yeah, so this is what happened to me on the live trade, everybody. I took a loss right there. Yes, it's a small loss, and yes, I technically could have gone break even. I seen the signs. And some people on the live probably wouldn't break even if they follow my advice, but then it comes back up. And so I'm like, dang, what are they on? So let's zoom out and say, yo, what's going on here? Like, am I wrong? And guess what I'm saying at the same time? Facts, I know, right? Well, guess what I'm saying at the same time? Yo, I still see the trade setup. And let me show you what I still see. I still see the same thing. You got the higher lows, you know, it's still a choppy move up. And also, when I look at the downside, we didn't accomplish anything. You know, we didn't. Well, this wasn't a fair value gap yet, Mary, unless maybe it was on the 15-second. I'm not sure, but it just became a fair value gap right here. Is what I'm trying to say. But maybe you meant on the 15-second. But yeah, yo. So what I'm trying to say is, people, the copy, the trade setup is still here. So am I just giving up on the bearishness that I had? Nah, not yet. I still see it. But let me tell you something though. It's a if-then statement. I ain't gonna lie. It's an if-then statement. So what I did on live, y'all, I said, look, if not this, then we're going to weekly highs. So what we did was, I don't remember where the entry was. It had to be around this area somewhere. After we got stopped out, what we do is we switch sides. At this point, I personally don't want price coming back to this fair value gap, but if it did, it needs to hold the upper 50% of it. And so you have your stop set, you know where your target's at, and you target the highs. And so that's exactly what we did. We got in and we got that same bread right back on the upside. And we actually run weekly highs. So first and foremost, the divergence that I noticed on the S&P with the ES, how one of them ran weekly highs and one of them did not. I still think it's a fire trade setup. Divergences happen at major liquidity pools. Previous week highs is a major liquidity pool. You know, so it's not like you know, I love the area I tried the divergence at. I got a fair value gap as confirmation. I had a great stop loss. Shoot, I really could have went break even if I wasn't being kind of stubborn, to be honest with you. And so I love the trade setup, and that's what I want you guys to see. That first of all, I definitely lose too. Everyone loses, and also as long as you size your plays the right way and you're taking high probability setups, you're going to be net profitable over time, but you're going to take some losses. Like this is like the setup I had every confluence in the book, and it still didn't play out just yet. And also, something I learned from the late great Kobe Bryant was something called next play mode, which is like, you don't want to dwell on a bad play. Like let's say you miss a shot in basketball or you get a turnover or something. You don't want to just like dwell on it, like thinking about it 3 plays later. Like, yo, move on. You still got to play defense. And after defense, you still got to run offense again. And the next play is coming and the next shot is coming. So it's just like being even killed and just focus on the next play. And so that's literally what I thought about right here. I think I said that out loud on live too. Like yo, next play mode, y'all. Because I'm not even, if it wasn't this live, it was a different one. But I definitely said it last week. On live, I said to them next play mode because I want us to have that mentality where it's like it's an event statement. Like the whole setup is based on price holding this general area. So if it don't hold it, then guess what? We're bullish. And guess what? If we try bullish plays after this, right? And that got stopped out. What I'm finna do? I'm gonna go cash because I tried a valid bullish play and a valid bearish play, and none of them played out. So then I'll just go cash. So all I need is really just 2 losses at that point. I don't need 20, and that's okay. And if you size it the right way and they're both high probability, you'll be okay over time. You know, why did you exit? Stop loss. I did say why I exited, but I'll repeat it again for shorty. For the downside, I exited because what was it? No, it was on the 15-second. My bad. Oh, I pressed the wrong one, please. Okay, cool. All right, bet. So look. This fair value gap right here is not a good fair value gap. That is not. By the time price leaves this area, like where we were at, you no longer want to see price come back into this to go lower. And some people who don't know what they're talking about will tell you, yo, but that's in premium, right? You want to take this premium fair value gap to the downside. No, it's contextual. In this context, with this failure swing, we don't want price to come back to a premium to go lower. So actually a revisit into this purple area, once we came here, I already knew I was wrong. Like I knew I was wrong. So based on my entry, I really could have gone break even because my entry would have been around here, right? So by the fact that price is even coming back to my play, I really could have gone break even, to be honest with you. You know what I mean? Because like the fact that we're even at purple shows me I'm about to be wrong. We're bullish for real. So knowledge of fair value gaps definitely helps out, knowing where price should and should not go back to prior to meeting an objective. We did not meet the objective, right? We did not finish running these circles. And so I knew that we didn't meet the objective. So there's no reason for us to be back up here right now. And so that's how I knew I was wrong. And my stop really should have been break even, but still I did stubbornly, because I'm human, I have emotions too. I did stubbornly leave my stop right at the top of the fair value gap. Once it got ran, then I got back in on the other side and we took it to the upside instead. But if I was trading this without emotions, though, I really probably should have taken the break even stop right there. Another thing my stop loss could have been based off of. I really, honestly, if we're even going to use this fair value gap right here, it needs to be the lower half of it, like absolutely the lower half. By the time we come to the upper half of this, I know it's so small, it's a 15-second, but by the time we come to the upper half of this 15-second fair value gap, I already know I'm wrong, by the way, as well. Anything to the downside should have stayed in this general area. So to be real with y'all, like I already know I'm wrong right there. This is where I know I'm wrong at. And so like I said, this could have been a break even stop, but human beings, right? Anyways, and it's okay though. At the end of the day, I've lost like 13 points or something. Like it's not like it's okay. I lost. It's a very small stop loss. You have to remember that this is not the hourly chart. This is the 15-second chart. So even this little stop loss is obviously very much okay for my account. We're good. We're protected. It's all right. And then of course you play the upside. Now let's talk about the upside. Target hit. Are we surprised? No, we're not. It's an if-then statement. If not this, then this. Copy, copy, copy. So here we are. Here we are. We don't need the S&P at this point anymore. Let's do this. Okay. First and foremost, before I continue, I'm sorry. Can I get ones and twos in the chat? Can I make sure that y'all understand what I'm saying? Ones if you got what I just broke down. And twos if you like, yo, bro, what you talking about right now? Right. Whole lot of ones coming in. That's good signs. And obviously, if you don't know what the fair value up is, I understand that you're probably, you know, a little bit lost. And if you stay to the end, I could definitely explain it for you. So, but I don't want to explain that right now, just because I got a lot to go over today. But I appreciate y'all giving me the feedback in the chat. Glad everybody seems to be on the right page here. So let's keep it pushing. So we take this move to the upside, and as we get to the weekly highs, right, the previous week highs, I'm noticing how price is staggering. I'm like, yo, what's up? Like, so that's why I said on the live too. I say, yo, everybody, I ain't gonna front. I feel like we're gonna come right back down. Remember, I had two different setups I could have taken on a reversal. SMTs cause reversals, and guess what else causes reversals? Sweeps. They're both valid reversal strategies. And so guess what is still in play? The sweep is still in play. And so I'm like, yo, this is a real choppy move up here. Interesting. Oh yeah, don't forget that trade setup. And guess what we did? Engineered yet another sell side pool. So now we got 4 different sell side pools that they engineered, and then you still have the fair value gap below that we probably want to tap into. Copy. Let's work. Let's work. If I see what I like to the downside, I'm getting in. So let me ask y'all right now. Answer this in your head. Are you getting in right now? In my opinion, I don't think it's smart to get in right now. I don't. Like, you have no reason to get in. Don't ever get in just based on speculation. Like, I feel like we're gonna sweep. Like, I feel like we're gonna sweep just like you do, but without confirmation is very dangerous. Very dangerous. And once again, the reason we're anticipating a sweep in the first place is because of how we took these highs. See this nastiness? Yeah, all right. That's typically what happens after that. Okay? Bet. We here now. Let's work. Let's work. Okay, still one of these slow grind moves up. Price starting to flip over. Interesting. Still staggering, but I'm peeping the signs. I'm like, yo, y'all. Oh, we exited our trade. Probably, I don't remember, to be honest, but like just knowing myself, if we would have invalidated this red candle, I would get out. Just knowing myself. So probably right under this red candle is where we got out the bullish side of the play, and we're cash at this moment. All right. Okay, boom. This is where we got in shorts. So we get in shorts, right? right here, like after this comes in, because we already anticipating a big drop. And now what do we have for protection? Bearish fair value gap. Beautiful. So you get in, stop loss slightly above it if you want it to. For me, I'll put my stop loss right here, knowing me. All right, get in, got something to protect you, because if price goes up, what should it do? It should reject this, preferably the lower half if we being real. It should reject the lower half of that if we come into it. And then we want to see if we keep dropping, because that's what's in play. This trade I did. And so I know what some of you were looking at. Some of you were looking at this fair value gap right here. And some of you were also looking at maybe this one. And I would tell you that both of them are out of context, and both of them are extremely, extremely low probability. So I was not concerned with those at all. And I was able to just take this trade and see how we push right past. So price wasn't even concerned with that. We didn't even get a little baby bounce. Nothing happened in here. We pushed down. And so this is like, okay, bet. This is beautiful. Order flow has shifted bearish. And would you look at that, right? Would you look at that? Straight line. This is literally what I wanted at the first part of the morning, but they pushed up one more time, swept the highs, then they came down. It'd be like that sometimes. So I took a loss, got it back right away, and then got a lot even more after the fact. And so what are your lessons here? Notice when price is engineering liquidity into running a liquidity pool. You want to note that. Something else you want to note that you could take away from this demonstration is next play mode. You feel me? Next play mode. It's really a lot of if-then statements as we trade this market. So like if you know the place of invalidation, which at this point was this is our place of invalidation. If we know that, then if we invalidate it, why would you just sit there and just watch it and cry? I'm not going to sit there and watch and cry. Like if I see what I like on the upside, guess what I'm doing? I'm playing it to the buy side target. Why would I not? I'm gonna get the bread right back. I'm gonna get it back faster than I lost it. You feel me? So look how when price ran past the invalidation point, look how we got past it. What I tell you about the manner at which price moves. You got this fair value gap and you got this on the bullish side of it. And just quote unquote coincidentally, look where we bounced at, the 50% of this one. You're seeing everything you need to see for a bullish move to the upside. So why would you not get involved after the manner to the upside is extremely smooth? The market is definitely a bully, right? But yeah, man, that's what it's about. So that's something you could take as well, like next play mode. And then of course, I think if I didn't say it already, whatever, the choppy move into liquidity, yeah, that a lot of times leads into sweeps. All right. And then just stop loss placement too. It's like, when I went short right here, right? Like what was the shorts based on? The shorts are based on price making this fair value gap back through the liquidity. So I don't need my stop loss to be at the swing high, which a lot of people teach, and to each his own. I don't teach like that. I don't trade like that, because I know what I'm in a trade for and I know what should be respected. Like if price came back up and invalidated this fair value gap, to me, I feel like I'm hoping and holding. Like, please just go back down. I'm praying, like, for what? And like, if we're bearish, it's very simple. If we're bearish, we're gonna reject the 50% or the lower half of this fair value gap. Simply put, like it's not. First of all, it's probably not coming to the upper half, and it's definitely not invalidating the entire fair value gap if we bearish. And so I don't need to see it come up here. I'll take a smaller stop loss, save myself the extra 15 points of loss, and protect my account. You feel me? If it really, really did this, right? Like if it really did this, guess what I'm gonna do? I'm gonna get back in. That's okay. I take the small loss and I'm gonna get it right back if it turn back around and start going back my way. So I'm always team get back in versus team hope and hold. Always. Always. So like, yeah. So like stop loss placement could be like on your invalidation area. All right. Hopefully that makes sense to y'all. So that's what y'all can take away from this first breakdown. Oh, and just to show y'all the exit, my fault. I should have showed y'all the exit here. Remember, we aim for this inefficiency. And when I looked, it's funny, it's the same thing on the upside. Let me circle it for y'all. Look, remember this choppy grounded move up? How that's a bad sign for continuation? What y'all think a bad sign for continuation was for me on the downside? Looking at this, the way that we went into that bullish purple area, which is a bullish fair value gap that we got on the 5, right? So looking how price came in, I'm like, nah, if we reverse, it's gonna be bad. So the only hope I have for us to continue lower is this fair value gap that I have here on the 15-second. And so I know if price invalidates that, it's over for me. And obviously we'll be in profit, but you catch my drift. Like, it's time to get out of the play. So this is what happens here. Once price, yep, this is the exit. Once price come above, we exited right on top of it. Like, all right, yeah, it's over with. And then good exit, because this is what 10:02 a.m. when we exited. First of all, money's made, objectives are hit, whatever. And then you'll notice that the market pretty much stayed in this general area for quite some time before making its next move. So it was a great exit, honestly. Doesn't mean that it's, we're done dropping for the whole day, but like, nah, I think it's a solid place to exit your day trade for surely. So let's see how this goes. I'm saying trade view lately been slower than it used to. I don't know what it is to this day. I don't know what it is. Like, I don't know if it's just my trading view or if it's everybody else's too, but I'm very lost. So, cause I want to show y'all a few other things. You chatting? My laptop not even dinosaur. It's just too much on it. But my laptop is actually solid. It's I got a MacBook Air. It's just too much on it. Too many classes I run. So much storage. I think I'm at the place I wanted to show y'all now. So like, okay, first of all, we exited at 10:02. We finally start breaking down again at 11:06. So you can see over an hour passed before we made our next move in the market. We finally invalidated that. And I wanted to show you guys that, this is right here. It will be a bearish order block. And now that you can see that order flow has shifted bearish, why do you think bearish PDs? That's why bearish PDs are working. Bearish PD rates, such as a bearish order block, have high probability in bearish price action. Okay, and so bearish OB right here, whoever is teaching you that an order block is just the highest candle right here does not understand order blocks. So if you have a teacher that's teaching this right now, I'm not saying they can't trade. I'm just saying that their understanding of order blocks is flawed and it's off. An order block would be all of those green candles, not just the one on top. All right, now here we go. Come on. All right, so you see price rejected. Dang, man, if you was waiting for your entry at the top green candle, you would have missed this entry. That's wild. Also, let's look at the 15 here. You can see price tapped in right there. And what I want you to notice is if you were staring at the 15-second chart, look at this 15-second fair value gap and look at where price stopped at. To the exact tick. All right, y'all see that? To the exact tick of where that fair value gap is. So this is what we call real price delivery. This is real price delivery, real precision in the market. You see price breaks down after that. Same thing here. Taps into this fair value gap. Call it OB if you want. Whatever. We continue to drop down. Things are good. And then you have this 1 minute bearish value gap. I want to show y'all how we use that. So you can see that price ends up coming up, rejects this 1 minute fair value gap twice before continuing this bearish move lower. This fair value gap was so important on this price leg because this bearish price leg is also pretty choppy. And what I mean by choppy is there's a shortage of fair value gaps in the price leg. So there's fair value gap right here we rejected. It's choppy. There's one right here, and guess what? We rejected that. But those are the only two fair value gaps in this entire price leg, and that's the ones that price rejected. And so you definitely want to note where these fair value gaps are. And hopefully, if you're new here, what we learn about fair value gaps, what I teach, is that you need bodies to hold the fair value gap. Okay, so I know you're looking at the wicks like, yo, you would have got stopped out. Probably not, because we want to see bodies hold it. So bodies held the fair value gap here, and so it's valid and on both of them, obviously. And then we continue to break down, and then you see eventually we hit some lows. Bearish stuff stops working. So for example, you'll notice there's two bearish fair value gaps right here, right? These two ones right here, they got invalidated. Let's see what happens after they got invalidated. After these two bearish fair value gaps get invalidated, next thing you know, price starts to push back to the upside, or it starts ranging really, but then eventually pushes back to the upside because it stays in a range for a little bit, and then you'll notice the trading view doesn't move ridiculously slow. You'll notice that price ends up like taking back off to the upside after this. All right, so once you see your signs to stop riding these shorts, believe it. Like the signs was right here, you know, stop riding these bearish plays, and you probably should believe it, because shortly after that, yeah, it might have went down one more time, but ultimately we found our way back to the upside. All right, so that's some more takeaways for you. Really just listen to price action, listen to what it's telling you. Okay, listen to what it's telling you. All right, next demonstration. So some good stuff to see, good stuff to take notes on so far, I would say. Hopefully you agree. Skate. Let's get it. So what's the next day? Wednesday, right? Let's go. Trading view don't act a fool. Let's do this instead. And if y'all have questions at any point, like, definitely feel free to like put them in the chat. I'll try to answer them as much as I could. It's funny how my mom's just calling me and she know I run class at 6:30. Hold on, let me tell her. Running class. What's up, Mom? All right, yeah. I don't know. Hold up. Trading view acting slow. I might gotta like go to a different tab or something. Let's go to a different tab. Let's go ahead. Yeah, it's that replay, man. That replay be killing me lately, man. It's annoying. Like it's actually very annoying. I know, but yeah, I know. No, she said sorry. Thought classes were later. It's all good. I appreciate you. She actually just texted me that. But facts. I thought about that too, though. Like, I hope she good. All right. So what is this? Friday, May 2nd. My bad. Yeah, I just gotta find where I want to be. I want to be on Wednesday. Okay. So found it though. So let's go here, people. And we just talked about this from Monday's price action, which really was Monday's was around here. So this is what we just looked at. This is the hourly version of it. We looked at that. And now Tuesday happens. Tuesday is obviously pretty trash. Wednesday now happens to the market. And something I was telling everybody in the free chat and my mentorship, of course, both, is yo, you see this build up where we have what? Higher, my bad. Where we have higher low, higher low, higher. You see what I'm saying? Same concepts. I'm like, yo, price is gonna turn back around in a straight line and run all of this area, and then I'm gonna be looking at the lower half of this 4-hour bearish bullish 4-hour bullish fair value. So that is the setup now. I'm waiting for price to turn over. I know we run into the upside and everybody in the world is super bullish right now, but like, hold on, we don't move like this when we bullish. So I'm not saying we finna drop off to all-time lows right now, but I will say we're gonna have a retracement just to kill this area. All right, so I'm waiting for order flow to shift back over. All right, we understand the plan. Everybody good? Y'all see why I said that? There's the bullish fair value gap under it, and it's a whole cluster of candles that's moving like a staircase. That's not how price moves when it's really on a mission. So before it continues, it needs to take this out. Hopefully everybody's clear on that. We all could get that gem. Now let's move on. I'm actually gonna move into market open for real. So you see price pushes down. This is 9 o'clock. Let's go 915. Let's go 930. All right, and then we could like pick up from here. All right, so we caught some of this downside on the live. The execution here I wasn't as happy with. I definitely made money in the pre-market by myself. On live, I was like, we made a little something here, but not really like how I like to execute. Like, so a couple unfortunate things happened, like getting stopped out to the tick, and then cool. But next play mode, you feel what I'm saying? So something I told everybody, on in the free chat, like I said, is that price wants to come to the lower half of the purple area, the lower half of the purple area. That is where price can turn back around. And if it does not turn back around in the lower half of the purple area, guess what it's doing? I ain't gonna lie. If we ain't turn around right here, we were going to way lower, way lower. Like, this area was so important. And I obviously said that. I really said it the night before, if we being real. I said it the day before. I said it the morning before, low key. I said it when prices up here, somewhere up here, something like that. And then I said it again that very same morning, like, yo, everybody, I'm looking for price to come into the purple, the lower half of the purple, to be specific. All right, so the reason I say that, or the reason I bring it up, is because you need to know before you trade which areas price can reject that, which areas price can bounce at. So your job is to learn which PD arrays are important to the market, because the market will not only target these PD arrays, notice that price came into it, but the market will also react to these PD arrays and go back in the other direction. So if you don't know where they are, you're screwed, basically, to be quite frank. And so, do I believe in this rally yet? Hold on. I'm going too fast, my fault. But no, I don't believe in any rallies yet, because I need the price to come into the lower half. Now that we came into the lower half, I'm watching this thing like a hawk. And so what I did, and what I always do, is I'm always scanning time frames. Like, see, notice that we came into the area that's important, right? The lower half. Now that we got there, I'm like, yo, any type of reversal signals that I'm getting, and I don't use indicators, that's not what I'm talking about, by these naked candles, any reversal signals I'm getting from these naked candles, I'm interested in taking plays in the opposite direction. So something that I like here is we had a very extremely important bearish fair value gap right here, extremely important, and it got invalidated just now. While it got invalidated, we simultaneously made a bullish fair value gap. I ain't gonna lie, this is a beautiful setup for a play. I'm not mad at a person taking a play right here and having a stop loss maybe right here. Right here is not bad to me. Something like that. That's not a bad setup. All right. Now, as you can see, this is one of the days where the candles are expensive. What do I mean by that? So y'all ever traded futures, and on some days when volatility is extremely high in it and everybody's like scared and the market is like in panic mode, when you take a play and what normally might be like a 20-point stop or something is all of a sudden like 60 points today, and you like, yo, what's going on there? Yeah, so David said indubitably. Yeah, that'd be crazy. This is one of them type of days. For what I'm saying, this is one of them type of days. Because as you see, this is just a 1 minute fair value gap. This shouldn't even be a crazy stop loss, but from 174.25 to basically the bottom of that, this is 53 points. And so on days like this, what you do is you decrease your sizing so that you're not risking more dollars than you typically would like to. So if you notice that where you entering versus where your stop loss is more than what you thought it should be, definitely decrease your size. And yes, definitely, because there's so many different, this is confirmation through invalidation, inversion, all that stuff. You got a whole lot of reasons to take this to the upside indubitably. And so we want to go ahead and enter this play. And then something that is, this is the point right here of invalidation. I'm telling you right now, and I said this on live, obviously, at the time, if we invalidate this 5 minute bearish fair value gap, we're bullish. Let's keep it frank. It's just this. We don't want price coming back into these fair value gaps to go lower, none of that. And let me show you something else. You see, dang, they revealed it to you, but whatever. You see this bearish fair value gap, this huge one. Man, when price was down here, people, price is down here. We don't talk about things in hindsight. I don't do hindsight teaching. I said at the time on live of my people, if price comes right here, we are bullish. This quote unquote bearish fair value gap is a horrible place to take shorts at. So I know it looks like an expansive major bearish fair value gap. You're like, yo, man, this is a great fair value gap. This is exactly what I saw on YouTube. I'm telling you, you're gonna get clapped trying to trade fair value gaps until you get deeper understanding of them. This type of fair value gap right here in this context, is like it's a gap. And what I mean by a gap is we're gonna fill it in. That's it. We're not rejecting it. We're gonna fill it in. So I know it's labeled a bearish fair value gap, but we're not gonna go bearish off of it. So I encourage you once again to find someone who understands fair value gaps in a real way. And I will save you time and say I'm not gonna front. I really barely know anybody who does. I'm talking about YouTube creators and everybody. You'll be surprised. Just because somebody has a lot of views on their video doesn't mean that they understand this stuff and the nuances that come with it, especially because everybody just teaches in hindsight. Nobody calls it before it happens. And so it's very easy to teach in hindsight. I could come to you right now and say, see guys, price bounce on this bullish fair value gap right here. Look, see? Yep, fair value gaps work. Yeah, fair value gaps work. See, it bounced right there, made a new high. Exactly. And I'll get 3 million views on that video. Could I have told you that before it got there though? That's the key. All right, so anywho, you see this is a bad fair value gap. And now, so really for me, because I don't want price in the top purple area, I already know if we're gonna be bearish, it needs to reject this one. Needs. This is the one for us. All right, so let's see what happens. We did not go long right here. Actually, we waited to see what price wanted to do with purple. So we are actually cash right now. Me and the mentees and the people that's on live with me, we're currently cash. And we're looking to see, based on it being a 5-minute area, we want to see what the 30-second does when it gets there. I'm saying it again, based on this being a 5-minute bearish fair value gap, we want to see what the 30-second time frame does when it gets there. So if the 30-second time frame comes here and I watch order flow shift over on the 30-second, I'm taking entries and I'm riding it to the downside. All right. But if I don't get confirmation on that 30-second, I'm not taking a play. So although I have this as a point of interest, that does not mean it's going to be a point of entry. Point of interest and point of entry is not synonymous. Point of interest is simply a point that you're interested in. That's it. I'm interested in the purple area. I want to see what price does when it gets there. But it's an if-then statement. So if not this, then this. It's really that simple. Like, don't overcomplicate it. You just need to know what are the important areas to build your statements on. And for me, I know that this is an important area to build that statement on. So here we go. What do you notice so far? You notice that the 30-second invalidates this bearish fair value gap. This is the important one. This one right here is low probability. Just further showing you, like, understand, like, fair value gaps for real. This one right here on top is low probability. The one right here is the one that is important. We trade past it. I already know we're bullish. On the 30-second, at least, I already know we're bullish on this time frame. So therefore, I know price is coming back to the purple area. So when I see this happen, I'm like, okay, we're gonna come to purple. So instead of me trying to short the market, let me at least wait for my entry. Y'all ever been tempted to enter your play early? Like, you're like, dang, I don't know if it's gonna hit my point of interest. Maybe I'm gonna just get in. This could help you with that, because like if you see something that could have sent you bearish actually not work, then maybe you should wait on your point of interest. You should wait on this, because that's gonna get hit. Trust me. Will it reject it? I don't know, but it's gonna get hit. All right, so let's keep this demonstration going. So many different points I can make. So forgive me if sometimes I'm all over the place. It's just a lot I want to say. Simultaneously, we made a bullish fair value gap on the 30. Let's see if price can hold it to take us to the area. But of course it should, because we are bullish. So if we're bullish, wouldn't you expect bullish fair value gaps to work? Notice the 30. Not 30. Notice the 50% reaction right there. Notice the 50% reaction. And next thing you know, price comes into the area. All right, now that we into this area, we're wondering at this point, is price gonna reject it? Simple, like, yo, is price gonna reject it or not? And I don't enter the play. Because even though you might say, yo, bro, this stop loss is what, from 208 to like, let's just say 230. It's 22 points. Not that bad. Why don't you just take puts or take sells and just live with the result? I don't do that. If you do that, congratulations. We we all got our preferences. That's just not me. I'd rather save myself the loss. I just know there's plenty of money to be made. I'm about capital protection, capital preservation. So for me, I already know, like, yo, if price for me were to come to the lower half of this fair value gap, then I would enter my plays to the downside. I need to see the lower half of that fair value gap personally. Then I would get in shorts. If I don't see the lower half of that fair value gap, I'm not in it. And what do you notice? Price holds the upper half. Price holds this one technically with bodies on top. And we trade past the 5-minute bearish fair value gap. So guess what? We ain't take no loss. But what we did do at the same time is we said, okay, isn't it an if-then statement? Is it not an if-then statement? Okay, I believe it is. That's what I learned. Copy. So if not this, then you see these equal highs? Yeah. Oh yeah, and by the way, on the 5 ski, I was telling everybody price gonna come to this fair value gap here. Is this supposed to be the top for me? Like, do I think price is gonna reject this and make new lows? Absolutely not. This is just where I want to take profits at on this day trade. Because after this, I understand that the market could consolidate, and I didn't want to get caught up in consolidation. And so that's where I'm just looking to take profits at. Like, not only the liquidity pool that you see here on the 30-second, not only these equal highs, but this 5-minute quote unquote bearish fair value gap is a target. And so all of a sudden you have a beautiful trade setup. You know, even if you went long here with a stop loss freaking, I don't know, like right here, something like that. I don't really remember where the stop was at, but yeah, that's how we took the play. I believe I was on a 1 minute, my bad. I think my stop was based on a 1 minute. Yeah, yes. It was this 1 minute bullish fair value gap that we was making. That's what my stop was doing. Yes, it was a 1 minute bullish fair value gap, and I had loved the fact that we had the purple area to act as an inversion, and so we looking to push to the upside now, and yeah. So we just hold it through all the noise. Even though the 1 minute was a little bit choppy on the way up, we still held it and took it into the area we wanted it to, and so that's that. So that's that. Easy. So showing you once again, next play mode. We didn't have to take a loss this time, which is good, but still your if-then statement is based on the purple area. So if not this, then this. If not down, then up. Keep it simple. And if not either one, meaning if we would have come through and invalidated the stop loss here, what's next? Probably this. Cool. So I'm chilling. Keep trading simple. Formulas, man. Keep trading simple. And that's that. And then really, I mean, that was, yeah, y'all probably seen what happened after this. Because really after this area, then the market like largely consolidated. I'm actually gonna stop replaying show it again. Hopefully we don't have the same occurrence on like the other tab I had open. Let's just see what that area looked like. So you guys may recall this from this day here on Wednesday. It's a little bit choppy, and then it kind of went sideways, and we took off. Like, we took the heck off in the afternoon. So yeah, that really was the bottom. So all of this occurred after, and the market went way higher, and we knew we was bullish since this area. That's when we knew we were bullish. Like, we literally know it from down there. And so anybody, oh, and by the way, don't forget that we knew the market would bounce right there. We got confirmation that we were correct right there, right? So we knew the bounce would come here. We got confirmation right there. And then after that, the rest be history. And so you don't need a market structure shift to know that you're bullish if you understand price delivery. I'm not mad at people who trade market structure. Do what you do. But I didn't have to see a quote-unquote change of character to know that I'm bullish. I already know I'm bullish from way down here. They don't need to see us run the previous highs and nothing like that. And so even for like my new mentees, like who may have heard me say like, hey, everybody, like I'm a graduate child from traditional market structure. This is what I mean. Like traditional market structure, they didn't realize that we was bullish until right here. But with the way that I trade and the way I do things, I'm already know, because I understand what the market objectives are. I already know since right here we bullish. You know what I'm saying? Q said BTSMC, the precision is top tier over here. Come learn how to snipe real life. Definitely tap in, people, because this is really what we do. We break down the candles in a surgical way. So this is smooth. This is smooth. This is a good demonstration. Tess said like no other. Indubitably, I got a great team of traders. Message y'all heavy. Notice that we use it on the other side. This is a nice little reaction right there, by the way. Smooth. Anyways, show you Lady Cuz. And Lady Cuz, this is one of your favorite setups here, by the way, for more upside. So yeah. Okay, cool. So that's the upside right there. And what's next? I had another demonstration for y'all. Let's hit the Friday. Here we go. That. Let's go right here. I think, what is this, Thursday? Oh yeah, okay. My bad, y'all. Had to refresh my brain. Okay, now I then tell everybody, after the massive rally, it's night. Actually, the market had just closed or something like that. My bad, but either way, I was like, hey, everybody, this is the plan for NASDAQ. So y'all see this 4-hour bullish fair value gap. And if you're new here, yes, fair value gaps do a lot for us. And I'm trying to tell you, it's the best tool to have in the market. The problem is maybe 2% of fair value gap traders really understand it in a real way. So you have a bullish fair value gap here on the 4ski. And I told everybody that I want you guys to go inside of the 4-hour fair value gap and pull out this 1-hour fair value gap right here. And I said, this is our if then statement. So if we're bullish, we will use this area to go higher. If we're bearish, we will invalidate that. And if we invalidate that, man, we were gonna run these lows. And if we ran these lows, it really would get way worse. I'm not gonna front. So to me, I'm like, yo, the fate of NASDAQ is in the hands of this purple area. So this is where I told everybody the bounce should come from, right here. So once again, calling it before it happens, not after the fact, before it happens. This is the spot for us. Copy. So what is that? Thursday, like afternoon. Oh no, the day closed inside of it, right? So the day closes inside of it. Thursday closes right here. And then I said, okay, everybody. So we got to the area that we knew price would come to. Everything is dependent on what we do right here. Now, here's something else I said. I said right when the market closed, you see, this is like 4:40 p.m. You feel me? And futures closes at 5 p.m. This is 4:40. So right around 5 p.m. Let's just go ahead and show us 5 p.m. so we know where it was at. Cool. Right around 5 p.m. I'm seeing the 5-minute bearish value gap right here is our if then statement. If we're bearish, this will send us back to the downside. If we're bullish, we will invalidate this. As soon as we invalidate this, I already know we're going to make new highs in the market. We're coming back to these highs, so on and so forth. So let's mark that off. So your entire play is based on this itty bitty fair value gap down here. And we had a massive drop into it, right? Massive drop, which, by the way, do I even have to show y'all this? Like, do I even have to show y'all this? Let me show you it in 3 minutes. Probably cool in 3 minutes. Do I even have to show y'all this? How many times do I have to tell you about these moves? How many times do I have to tell you about these moves? I just talked about this whole demonstration, boom, straight line. All right, you see it again. So that's an easy play to the downside right there, right? I don't think this was too hard to see. Yeah. So, but I'm not even gonna go through that because y'all should be masters of that setup already. Like that's a setup that I give y'all for free. Take it and we can make it change your life for it. I love that. It happens all the time. Great setup for you. You just have to know how to actually ride bearish price legs and know when price is ready to make that move. That is your key. All right. So now we drop off, the market closes, and we have this. I don't need to see a change of character, quote unquote, to know that we're bullish. Notice people who trade market structure need to see price come back really above these highs, if we're being honest. They need to see price come back above these highs to know that we're bullish. I know we're bullish based on this one fair value gap right here. Okay. Plus, once again, it's based on this higher time frame area. So I told you guys the hourly bullish fair value gap inside of the 4 hour is your point of interest. Your confirmation is the 5 minute fair value gap. So everything will be determined based on this right here. All right. And now quickly before I continue, a question in the chat says, when they engineer liquidity like this, I'm gonna draw it for you so you guys know what he's talking about. He said, when they engineer liquidity like that, what's a good entry to the downside? So really, you want to go ahead and look at when price is forming and respecting bearish fair value gaps, because in bearish order flow, there will be respect of bearish PD rays. And so if you're just watching price action, you'll see that nothing is really being respected. You're moving sideways, this, that, and the third. Next thing you know, boom, expansion comes, and we have fair value gap right here. And it's really this simple. Like if I were to try to play out right here, I don't want to press rewind, so I'm gonna just pretend I got in like right here, right? I understand that price should not invalidate, excuse me, this fair value gap. Phase two mentees. We went over this in class recently. Hopefully you guys can see why I'm choosing the one down here and not the fair value up on top. Hopefully I can see that. Just think about, I don't even want to say it for real, but this is what we went over in our recap on Wednesday. So there's no need for price to come back to this larger fair value gap. If we're gonna stay bearish, it needs to reject this one right here. And so for me, like I would have entered short with a stop loss based on this fair value gap. So I'm risking all of like 6 points, risking 6 points to take out this entire area. And something else that I shared with you guys for free in these free classes is the 350 macro. What time did this down move start? Maybe I can't see the bottom of my screen. I want everybody to focus. What time does it say at the bottom of my screen? 3:50 p.m. This big bearish candle occurred. At 3:50 p.m. That's the start of the move. And so you're already, based on this time-based macro, you're already looking for some type of run on liquidity. And so if you know this order flow shift over and we're respecting or not even revisiting, even better, fair value gaps, that's a good sign that the move is starting and you have your targets to the downside. It's very likely we take out the whole area in one straight shot. No drawdown gang. I mean, if you would have gotten in at like 970, price went all the way down here to 755 for real. So what is that? 215 points. 215 points, just like that. And it happened so quick. But it took all day to build this up. It happened in one straight line. So do I like to trade this? No, I like to trade that. Do I trade trend lines? Heck no. I trade against them. So yeah, there that go. Now that's that. All right, so yeah, everything depending on that, and then I'll do this in a 5-minute real quick. So price chops at first, still in a moment of like, hey, what's gonna happen next? You're welcome, Hawkins. What's gonna happen next? Still potential to keep dropping off, right? This is convincing, and boom, we popped up. Oh shoot. Man, it's over. Oh yeah, we bullish. Like it's over with it. We bullish. Game over. I don't need to see nothing else. The minute we came over this purple area, I already knew it was up and stuck. And so now next thing we have here is price makes this bullish fair value gap. So what happened? You had now on the hourly time frame, peep this. On the hourly, you're gonna peep that we invalidated an hourly bearish fair value gap. This hourly bearish fair value gap is the important one. If we were bearish, we would have rejected the upper half of this bearish fair value gap. I bet y'all thought I was gonna say lower half too, y'all. Yeah, I'm telling you. It's a little deeper than you think. If we were bearish, we would have rejected the upper half of this bearish fair value gap. So once I seen price come over the upper half of this hourly bearish fair value gap, I definitely knew we was bullish. Like at that point, I'm like, yo, we super bullish. And no, heck no, I'm not looking for price to reject this bearish fair value gap. No, that ain't it. This is bad. This is out of context. That ain't it. That's not it. And so that's why when I have class that very same night, I say, hey, everybody, you see this bullish fair value gap right here? we want to see price hold at the 50% of this to move higher. As long as we stay on top of 50%, we good for higher prices. Price gonna make new highs in the market. Simply put. Simply put. So what does this bearish fair value gap that I don't like, what does it act as? This acts as something that we can react to. This acts as something we can react to take us to the real PD array. So this bearish fair value gap, I'm not saying we can't react to it. I'm saying that it's not going to generate new lows in the market. All right. So when you watch it play out here, you'll see that's exactly what it did. Shoot, actually, never mind. Freaking, it didn't even react to it. That's how you know it's trash. I thought it reacted to it, then sent us down. No, we invalidated it first. Even better, because I told you that fair value gap is trash anyways. But for future purposes though, sometimes the out of context fair value gaps will send you to the in context fair value gaps. That's what I really wanted to say. Sometimes the out of context fair value gaps will send you to the in context fair value gaps. All right. So that's all I was trying to say there. But ultimately, we actually trade above it first. Then we come down to the one we really wanted. And this is the one where I would say a person should have been looking for long entries on. We want that reaction around the 50%. You still have no confirmation for upside. But boom, you got to the spot for reactions. And what do you notice? If we were bearish, I want to know something in the chat. Which fair value gap would you want to see price reject? Number 1 on the bottom, number 2 in the middle, or number 3 on top? Do you want price to come into a premium to go lower? Do you want the middle one, or do you want the low one down here? I know you guys are probably trying to do it in hindsight, but I want you to really answer this for real. Which fair value gap? I want to see answers in the chat. Put numbers in the chat. Number 1, number 2 in the middle, or number 3 up top? Which one is, my question is, which one is the most probable for downside? Which is the most probable for downside? Number 1, 2, or 3 in this context? Which is most probable for downside? All right, so I'm seeing I got 2 in the chat. I got 1, 1, 1, 2, 1, 1, 1, 2, 1, 3, 1, 1. Okay, it's a lot of ones. So far, it's a lot of ones in the chat. Very interesting. I would say the second most popular answer seems to be number 2. Very interesting. Okay. Thank y'all. So 1s and 2s is definitely most popular. And I would say that I just don't like 2 at all. I'm gonna be real. I don't like 2 at all. That ain't it. 2 is not it. And I ain't gonna front. 3 is even worse. That ain't it. It's 1. In this context, it's 1. It's dead number 1. In this case, I don't have a preference on lower or upper half because they both have pretty much equal probability here. Hopefully the mentees can see why I say that. Anybody who's been with me for a while, obviously, not my newer mentees, my older mentees, y'all should hopefully see why I can say there's definitely probability on lower and upper half. So in a case like this, because they're both probable, you have to size it in a way. If you're gonna take shorts, you would have to size it in a way that it could hold the your stop loss doesn't kill your account if you have to hold for the entire fair value gap. So this fair value gap is about 15 points wide. Make sure you're in a play that could hold you for 15 points. Okay. But after that, y'all, it's over. Like, yo, if this don't hold you, automatically be running these highs. I know that for a fact. If it's not this, it's that. You feel me? And of course, when you come into this area, you might want to look at what the 30-second chart is doing, because I got that from the 5-minute time frame. So I want to see what the 30-second is doing when it gets there. And clearly it's not even it's not even checking for it. Like, it's not even tripping about that little area, showing you that we're entirely bullish. And then, yeah, the rest really be history. So you find your entries to the upside. You base your stop loss and you go. You can even have a stop loss based on the same purple area if you wanted to. You can have it based on it if you want to. And next thing you know, we push to the other side, and you can see, shout out Lady Cuz, I know this is one of her favorite setups. You can see how price reacts to that area. and then we get up out of there. We get up out of there. So come on, Nasquan. Yeah, I definitely think upgrading the trading view subscription is worth it. If you trade prop firms, they already should come with the seconds time frames whenever you're logged into your account, if I'm not mistaken. It should come with that. But if you trade like your own money in your own futures account, I think trading view that has a second time frames is worth it. But I ain't gonna lie. Make sure you understand what you're looking for. This is me speaking to everybody, not the person ever on the chat. Because if you don't understand price delivery on a deeper level, you're going to use a seconds time frame incorrectly. And I don't want to have people just on the seconds just taking it just because I saw Rel on the second time frame, so I'm gonna take the seconds. Like, no, I know what to look for, when to look for. I understand on a very deep level. So, and I only say that because I have had people that have tried the seconds time frame out after watching one of my free classes, and they be like, "I'm about to do that too," and it's like, bro, you don't understand even 20% of what I'm like really doing with it. Like, this is a free class. I share a lot of information here, as y'all could tell, but this is like 5% of what I know. Like, literally, this is nothing compared to what I go over in the mentorship. Like, nothing. So like, just be careful is all I say if you're gonna try to track the seconds time frame out. That's for everybody. The person I wrote in the chat, I already know he's tough. He a sniper. Shout out him. Um, I know Keisha. I definitely stole your nickname from Nasdaq. I ain't gonna lie. Yeah. So if you paying for the your prop firm should come with the seconds time frame. I'm pretty sure. Don't quote me on that. Maybe somebody could confirm in here, but I'm pretty sure your prop firm accounts should come with the seconds time frame on trading. Lady Kell said it will. Thank you. And then of course Top Step X also just has it built in no matter what. So if you trade Top Step, their Top Step X platform comes with the seconds time frame. And Kia is confirming it as well. So I appreciate y'all. Thank you for confirming that in the chat. That so yeah, I mean, what did I want to show you anything else on this? I'm trying to think. Oh yeah, we saw the 50% reaction and we popped out of there. What else? Oh yeah, so this retracement. Nah, hold up. My fault. I'm kind of drawing a blank. What did I want to say from here again? Okay, I think it was the 15-minute. My fault. Yeah, this retracement that we witnessed, also you could have seen how the 15-minute bullish fair value gap also held it for higher. But I think that's all I wanted to say on this demonstration. That's really it. Price just went higher for the rest of the day, and then it consolidated largely until market close. I don't know where we at right now. Let's see. Okay, yeah, this is like today. This part is today. This red price leg. This is what's going on as we speak. Okay, but the rest of that was Friday. All right, so there you go. That's like the breakdown of the week right there. I hope that you guys got some good things out of that. Can I hear something in the chat if you learned something? Did you get something out of these demonstrations? You don't gotta get everything. Even one thing is worth it because it's a free class. So it's a free class. Even if you get one tip, that's all that matters. Real talk. Smooth. Appreciate y'all in the chat. Glad y'all getting signed from it. Shout out Sheila, Kia, everybody. Appreciate y'all. Molly, oh yeah, Q, Monty, David, Frank, SSK, y'all some real ones. Alice, Shortologist, Chrissy, Nikita, Jose, shout out y'all. Appreciate y'all, man. Marcus, a real one. So cool, we got that done. Those are the demonstrations of the day. King Ellie, Rael, Devin, oh yeah, y'all some real ones. Let's keep it rocking. Let's keep it rocking. Boy, Max, Tracy, Fabian. I got some good people in the chat, y'all. I got some good people in the chat today. So let's go ahead and get into the chart debate. Yes, it is that time, David. It is that time. Let's get into the chart debate right now. Amen. Amen. Here you go. So this is the chart debate for today that we put out. This is what the chart debate said. So if you're watching this on YouTube, pause the video, figure out which arrow you think is the most likely arrow to play out. Do you think arrow 1 will play out, arrow 2, arrow 3, or arrow 4? Yes, I threw 4 arrows out there. And with the free community, the free community, people who've never taken my mentorship, but they just in here learning from the free classes. Shout out them. They think that Arrow 2 is what's gonna happen because 30 people out of what is this? 44? 30 out of 44 think Arrow 2 is the most likely scenario. We're gonna come right into this area and then pop right back up. All right. Arrow 3 is the second most popular. Whew. I'm nervous. I ain't on front. Hold up. Not time for the commercial break yet. Let's see what the mentees is talking about. Now, once again, for a little while, bear with my mentees because I have a lot of new mentees in the chat. I ain't gonna front. I got a lot of new mentees in the chat. So they haven't really learned from me like that yet. They didn't get into the source yet, so they don't really know how to predict price like that yet. But with my new mentees, they also think Arrow 2 is the most likely answer. I got 42 out of, what is that, 48? 42 out of 48 people think Arrow 2 is going to play out. Okay. What's the answer, y'all? After this commercial break. So today I'm drinking water, right? I am drinking water. I would typically be drinking some type of a juice or something sweet when I teach classes, but I felt like it's good to replenish my system because health is wealth, you know, and we are talking about wealth strategies. So it's only important that I show good health habits. And I feel like as a person, you know, in a certain position, it's good to show that I'm taking care of my body. You know, I was looking to work out earlier. I went on a nice walk, enjoy the weather, you know, just definitely doing things that's good for my health and my wealth. And everyone, you know, I definitely just want to, yeah, I forgot my lines for this commercial. I ain't gonna lie, I'm kind of rambling. I don't remember my lines, but you know, I just want to shout y'all out right quick. No, I do not, Keisha. I got your warning about that. No, I do not. All right. David, I'm peeping that. We do got some secret snipers in that phase 1 group that we got. Thanks. Rael, I can't even read that out loud, Rael. This is recorded on YouTube. I can't even read that out loud. But all right. So what you call it? What am I about to say? Let's show the answer. Let's show the answer. Like, because I'm sure y'all don't want me to stall or whatever, but make sure you're taking care of yourself, people. Here you go. The answer is Arrow 2. Shout out everybody. Free people, mentees, everybody. Y'all doing y'all thing. Arrow 2 is the answer. Correcto mundo. Y'all doing y'all thing. I'm really proud of y'all for real. You know what I noticed though, Ojo? I'm really noticing that my free members is getting better and better every week at this. Like, I'm like, yo, I really gotta up the score. I might really gotta up the score because like I don't like that. Like, why y'all learning so much? Y'all learning too much. That means I'm talking too much. Like 6 arrows next week. Facts. As this case say, because it's free. I know, right? There you go. 4 lines ain't enough. We going 6 arrows next week. We gonna up the score. Can't have this. I can't have everybody getting this right like this. This ain't right. It's not fun for me. I'm evil. That don't hit. Alice said, good teacher, or do we guess well? I don't know. Maybe a little bit of both. Too many gems for the free. I agree. I agree. Way too many gems for the free. But I just hope y'all know, like, everything I say for free is throwaways. To me, the stuff I say for free, people is better than people's paid stuff. But like to me, these is throwaways. I'll be like, y'all can have these tips because they ain't really like that lit to me. At least not now, because I have so much better stuff. So that's why I say like that. If anybody ever gets a chance to do the mentorship, I definitely feel like you guys would get a lot out of it. Because if you get a lot out of this class, you'll definitely get a lot out of the mentorship. That's a no-brainer. Appreciate you, SSK. David said there's gonna be no arrows next week. Can you imagine? I like that. That's a good idea, low key. Fabian said, I didn't want to guess because I'm new, but my intuition told me arrow 2 based on what you went through in this session. Appreciate you. I'm glad it's helping out, but don't be shy to get it wrong. New or not, don't be shy to get it wrong. Getting it wrong is okay anywhere in any of my classes. Being wrong, the best place to be wrong is my class. Be wrong. I ain't gonna read it though, David. My next mentorship will most likely be in Early October, I think. I think it's gonna be early October. They typically take 4 months. I just started a new one in April, so that'll probably take me to the end of August. And then, can I get a little break real quick before I start the new one? I'm low key burnt out, so I'm already burnt out low key. I haven't had a break in a while, so I kind of want to take a break before my next one, but we'll see. It wasn't Arrow One. There was no any. There was. All right, I'll say that real quick. Why wasn't it Arrow One? Why wasn't it Arrow One? Arrow One already moved past this bullish fair value up, so that was a giveaway to me. What are we bouncing on Arrow One? Like, what are we even, what are we reacting to? So if you look, click, like, there's nothing to react to it. And if you understand the BT4, which is something I highlight in the membership, you'll know which areas are the most likely for us to bounce on, and via that framework, this ain't it. We already, since way up here, we already knew we was coming back down to exactly where we bounced at since up here. So I knew that this fair value gap wouldn't work. This wasn't it. But even if you thought it might work, we traded past it already. So Arrow One definitely was the least likely answer out of all of them. To actually, Arrow Four is probably the least likely answer to me. I'm not even gonna lie. Arrow Four is probably the least likely. But yeah, says that. And BT4 definitely got it. And what Mr. Vincent said in the chat is extremely important, y'all. Definitely want y'all to read that. Good to hear, Alice. Good to hear. All right, so let's get into the future. Talk about the future. So what is this week? This week is FOMC, people. That means my boy, my cousin, Jerome Powell, he at the podium, he talking about what he want to do with interest rates and the economy, et cetera, et cetera. That's on Wednesday at 2:30. So shout out my cousin. He gonna talk at 2:30. That means that Monday and Tuesday will probably be days where we prepare for Wednesday. So they tend to engineer liquidity into an event like that. So you might see an engineering process go on where they're baiting you to play stop losses in certain areas, because Wednesday is a day where we'll go ahead and take those stop losses a lot of the time. That's what happens a lot. Q said Jerome's in the house, watch him out. What you know about that? Thursday and Friday will probably be continuations based on what happens on Wednesday. Okay. Yo, be careful of Friday. Look at all these Fed speakers. It's probably gonna be mad choppy. That's dirt. Probably gonna be mad choppy. But all right, that's that. So we know the days to expect. Now, I'm gonna step away from NASDAQ, and I'm gonna go ahead and take my talents into Forex. I'll be back at NASDAQ real soon, but let's talk Forex for a second, especially because I'm gonna be trading that more going forward. So last week, what was the plan last week? We called out price tapping into this purple area. This was our downside target. Once it got here, next class, I said, okay, I think what we want to do is we want to tap into this weekly SIBI. And what we do at this weekly SIBI will tell us everything. This weekly SIBI is extremely important, and I talked about price using the lower half of it. Okay, so everything depends on the lower half of this weekly SIBI for me on the dollar. To me, I think it's going to send us lower. I do think it'll send us lower, but of course, it's an if-then statement. So if not this, then I will likely say this. But let me just zoom out one quick time before I make that statement publicly. Yeah, I ain't lie. Yeah, facts. It gotta be that. Otherwise, I am bullish on the dollar after that. Preferably, like I said, the lower half. I wouldn't give up on bearishness if we see the upper half. I wouldn't give up. I'm just saying, I definitely think lower half should take us there, but if we come up, it's still possible. The only how I get bullish on the dollar is if we fully invalidate the area. Like if this whole area gets invalidated, I'm bullish on the dollar. For now, I am still bearish, and I think we're gonna reject the lower half. Okay, we got the plan. We good. So I think we're gonna see those lows. Everything should be lit, and that's that. So what does that mean for these other dollar pairs? We got to our bullish target right here. We had another target above. We had this choppy retracement. What existed below it? I told you I want price to tap into this to take us here. So that is still what I'm looking for. Did it tap in? Nope, it fell just short. Because it fell just short, I can tell price will probably turn back around, tap into it, and then go higher. I'm looking for price to go higher from this area. The weekly bullish fair value gap on the Euro USD. This one is the area I want to see take us to 1.16459. So that's that, and then British pound. British pound is right here. So same thing. They have a weekly bullish fair value gap. I think price wants to tap into it to push higher. Same vibe. I'll target the previous highs. Target the previous highs. What is this? New Zealand dollar. We got this weekly bullish fair value gap. I think price wants to use this to go higher. So these are all things I told you before. It's just like last week I'm talking about, but nothing happened last week, as you could tell, right? We just chopped. So I'm not really saying anything new this week. I'm still looking for this to take us higher. And, so far so good, but it's real early in the play. This is a target we had on the upside, I think. Yeah. We've been bullish since down here. So we targeted this blue area. We're still very close to the blue area, but we did not get there. So I definitely think this weekly bullish fair value gap wants to take us into the monthly bearish fair value gap. Now, when we get here, am I bearish? No. Just because it comes here doesn't mean I'm bearish. I'm just targeting it. That's it. I just wanted to go there. I'll watch what price wants to do, but I low-key feel like we're gonna end up running these highs. I'm not gonna lie. I think we're gonna run those highs. But I'm gonna take it a step at a time on that ticker. Frank says never traded forex. Do they have contract charts like futures, or is just continuous chart? I believe it's just continuous charts. I never see the contract chart on forex, but if that's incorrect information, definitely somebody feel free to correct me. But I'm pretty sure it's just this. It's not like a contract chart now. But like for example, I opened up a account with Owenda. So if I'm gonna take trades on TradingView, I need to have Owenda in the ticker name. So like you say it says USD CAD. There's a bunch of them. I have to choose the one that says Owenda if I want to trade under that broker. That's the only thing I could say to that. So yeah, that's where I'm at with it. And yeah, USD CAD. Yeah. We targeted this purple area. It fell just short, and I think it's gonna still go there. So there's nothing different than what I said last week. We just consolidated last week, so I'm still looking for that. I don't like the setup on USD CAD though. And last but not least on forex is USD CHF. I wanted to see price reject this SIBI to go lower. There's nothing that changed. Once again, we just consolidated last week. So I still have the same plan. Let's take this into the monthly lowest body. I believe was it target. Let me just double check. Yep. Monthly lowest body at 0.78. So let's take this daily SIBI down to 0.78. 581. I like that on USD CHF. Probably happened this week because FOMC is this week, and that tends to move the dollar. Okay, so that's a nice setup. I'm gonna definitely be looking into myself. And let's go to crypto. All right, crypto, man. Sometimes I be feeling like I should do crypto after NASDAQ because it makes me talk about NASDAQ because so much of my crypto analysis has to do with what is the NASDAQ gonna do. But I lean towards crypto moving higher, but I definitely see the bear case low key at the same time. So something on crypto we was watching was remember the SIBI we had used to take price lower that one day when price is right here, we called price back to these lows and it played out. And then I said, all right, this weekly bullish fair value gap, I'll show it to you. See it? This weekly bullish fair value gap right there. Yeah. All right. That weekly bullish fair value gap and this bearish fair value gap could cause a consolidation in between it. And what do we see happen? After I said that on this day, all the way at the top, what happened after that? A whole bunch of consolidation, right? Okay. I said, so I'm bullish above the consolidation and I'm bearish below the consolidation. That's it. Now, I will say, I do feel like we're going to move higher, but it is very suspect, though, how we're moving past this consolidation. So typically when we break out, we want to break out what? Fair value gaps. Okay, on the daily chart, what do you see here? Fair value gap. And we just invalidated it. I don't like that at all. So what can it do? Technically, it could use this very same purple area to go higher. So I'm watching that in case that happens. It could do that. Now, this bullish fair value gap in here, I am not a fan of it. I'm not a fan of this bullish fair value gap for upside. I'm dead not. I don't want to see that get touched if we want to run higher on Bitcoin. I don't. Now, if it gets touched, am I bearish? Like if this happens, like am I bearish? Do I think Bitcoin's going to new lows? No, but I wouldn't take longs. The only time I'll take longs is if we like pop out of this with mad energy. Then I'll be like, all right, bet. But I'm not entering longs right here, nah. Because I know if we come here, it's very sus, and we really could be making a move to the downside right now. So, let's see the weekly chart for a second. What do we just do on the weekly chart? On the weekly chart, we just made a bullish fair value gap on the weekly right there. And so we'll watch this. I think the absolute safest play for Bitcoin right now is if you're bullish, you want to see price hold this weekly bullish fair value gap to go higher. If it does not hold this and Bitcoin comes back under here, so basically it's almost like saying if Bitcoin loses 85,000, if Bitcoin loses 85, I really think we're gonna make brand new lows on Bitcoin. Like it's gonna get ugly. So Bitcoin's fate is in this weekly bullish fair value gap for real. So SSK said, if my cousin Jerome Powell drops the interest rates or mentions anything in regards to it, will it affect Bitcoin? Absolutely, it will. It definitely will. But like for me, something that I always say and I show and prove every week is that the charts are going to do what they're supposed to, regardless of whatever the news event is. So like regardless of what Jerome says up there, the charts are going to make sense. So like there's so many times I tell you, I mean, literally we're on Bitcoin right now. You're like, what happened? Like, let's just give a real life example of something that happened right now. So when Bitcoin was right here, we had class. Literally at this exact moment, we were in class. Bitcoin is up 10% at this exact moment. But guess where it's up at? It's in this bearish fair value gap that I knew price wanted to reject. What caused a 10% rally on Bitcoin this day, on this Sunday? There was some bullish news. I forgot what. I feel like it had to do with Trump and something he was going to do with crypto or something like that. The market rallied 10% in one day. And at the top of it, I said, I think Bitcoin is going to reject this to see new lows. Why? I'm not considering news. I don't care about news. The candles are going to do what they're supposed to do no matter what. And then we watched over the upcoming days that big rejection and price see new lows. So it went all the way from 95 all the way back down, hit like 76. That's a big drop. It's $21,000. It's a big drop, So it's like no matter what news is in the air, the candles would do what they're supposed to. So I don't really care what Jerome Powell does with interest rates. I really don't, because as you can see, price holds the PD rates it's supposed to hold, no matter what. The news is irrelevant. All right, that's all news. No news excluded. That's earnings. That's FOMC. That's NFP. That's CPI. I don't care what it is, So always keep that in mind. All right, and you're very welcome. But that's my thoughts on the coin right now, everybody. That's my thoughts on the coin. And let's move into Nas World. Nas World. All right, man. So NASDAQ, I ain't gonna lie, this weekend, that weekly feedback on Bitcoin, you said, is it one that we don't want to see revisited? I'll go back there for a second to answer that question really quick. So is it one we don't want to see revisited? Now you good. Good question. It's actually one we typically, you know what I'm referencing, right? Q, that's my mentee I'm talking to. That phase 2 one, yeah, that's one we actually would expect to see it revisited. So low keyly, I definitely can see Bitcoin coming into that 92-ish area as I look at it now. Yeah, it'll probably come in that fair value gap, which means if I'm looking at it, it's probably going to end up coming into this daily one. So once again, this daily fair value gap, I ain't gonna front everything. Bitcoin fate relies on this. I think once again, I think Bitcoin will come into this area. It's just what does it do when it gets there? Like literally everything is reliant on this purple area right now. In my opinion, this is Bitcoin's fate, is the purple area. I think we'll get there. What do we do when we get there is the question. All right. So yeah. NASDAQ. Let's get it. So NASDAQ, let's talk bull and bear cases. I'm gonna try my best to break this down. We gotta talk bull and bear cases on this ticker, y'all. All right. So, but I need to get y'all the breakdown. Obviously, y'all know I called out the top of the bull market ahead of time, and I called out the bottom of the bull market, the bear market. I called out the bottom of the bear market 4 months ahead of time as well. So we call the top 7 months early. We call the bottom 4 months early. This was the most crucial area for NASDAQ to bounce. This weekly bullish fair value gap needed to work, because if this did not work, I believe that we're going to see much lower on this ticker. And so that's why on December 31st, I drew a picture that looked exactly like that. And I made price end in the upper half of the weekly bullish order block. I chose upper half because it needed to bounce in the upper half based on the concept that I'm referencing. What happened? That exact thing happened. We bounced right there and we making highs. Now here's what's super ultra suspect about this being the bottom right now. I'm speaking about bear case. What kind of bottom is this where we pop out of the most important bullish PD rate in the market right now with such a disgusting, staggered, slow, choppy move to the upside? It's so sus to me. I ain't gonna probably like riding upside right now is extremely suspect to me. I ain't gonna lie to you. Now, at the same time, when I go to the 4 hour, one thing I do like on the 4 hour is how price is respecting all these bullish PD rays. You got it respected this gap, which was a new day opening gap, popped out of there with 2 fair value gaps, respected this fair value gap, the painting fair value gap, popped out of there, respected another fair value gap, popped out of there, and created yet another one that we just tapped into some seconds ago, which is actually a big part of my watch list. So it's funny how they're getting here when I'm getting there. And so the area I'll be watching on NASDAQ is this area that we just touched. Like, this area is very important to me. I do believe that we're gonna move to the lower half of it. I think we're gonna move to the lower half of this. So I don't think it's necessarily done dropping yet. I think we're gonna go to the lower half of this 4 hour bullish fair value gap. It's just a matter of will we use it. And so I was talking about something I like from a bullish perspective. From a bullish perspective, I do like how we're using all the PD rays we're supposed to use. PD rays I called out ahead of time, but I'm just saying we use them how we're supposed to use them. Now, if we invalidated if we invalidate a high probability PD array such as the one right now, if we invalidate this, I will say that's not a good sign. That's just not a good sign. Am I automatically bearish? No, but I definitely start to get more like, hey, hold on, they might be trying to shock everybody. Hold on. So do I think that'll happen? I don't know. I don't have necessarily, it's not one of those weeks where I'm coming out and I'm like, yo, everybody, this is gonna happen for sure. Like, no, I want today to outline bullish and bearish cases for y'all because they're both very, very convincing to me right now. All I know is, if you're bullish, I think you really want to see this purple area work, preferably the lower half. Preferably the lower half in this scenario. I think you want to see that work out. If it does not work out, I wouldn't say that we're automatically bearish or nothing like that, but you should be worried. I can say that. You should be pretty worried. To me, I would say I get like bearish on the NASDAQ if we just simply invalidate this bullish fair value gap. Like, if we come this far down, I think NASDAQ is doomed. I think it's over with. If we that's such a bold statement so early, right? But I think if we lose this, I think we're gonna like make new lows. This is so bold of a statement to make publicly, but so was me calling out the top of the bull market, and so is me calling out the bottom of the bear market. I'm forever making bold statements, but y'all see that they play. It's not like I'm just talking up here for fun. Like, it's rooted in technicals. Like, there's a reason why I say what I say. A large part of it has to do with the engineering, right? We've been engineering on the way up. So I'm just looking at order flow shifts. That's the big reveal. I'm just looking at order flow shifts. So if I notice we invalidate this, I'm like, well, I think we're gonna go back and take everything we engineered. Let's keep it simple. And so that's that. So this is important right here, lower half specifically. And I feel like I still have another bull and bear case I could speak about. Yeah, I mean, a bull case to me is just, I wouldn't expect this bearish fair value gap to reject price, right? This is out of context. I wouldn't expect that. Like, it looks like it's happening so far, but I told you guys, a lot of times the out of context fair value gaps just push you into in context fair value gaps so that you can go higher. So that's what I see this thing doing until it doesn't, right? Until it doesn't. We already talked about that, until it doesn't. But for right now, I wouldn't expect this to make new lows. So for me, I really more so see this as of right now. I see this taking us to 20,536.75. That is what I really see the most right now. But I need you to understand both sides. Weekly wise, this is a previous bearish fair value gap. And I know we rejected it already before. This is something we also called out at the time. This is a fire play. If you guys remember this, we called this out. We call everything out before it happens. Nothing is in hindsight. This was a fire move down. We caught, but that very same fair value gap, I don't typically like to use fair value gaps twice. The only reason I'm entertaining price potentially using it twice, because once again, we could even sweep this. We could sweep the previous highs, hold the blue area, and then come down. The reason why I'm entertaining it potentially happening is because, people, I'm telling you, first of all, FOMC is this week, so crazy things could happen. Second of all, like, this move up is so suspect. What the heck is this? I would not be surprised to see something like that at all. At all. But I'm rocking with the bullishness as long as it's holding. What can I say? It's working. But this is important for us, I ain't gonna lie. So we're gonna watch that short term. ES, really the same sentiment. ES, you see, I already had this drawn. I've been teaching the whole time, so y'all already know I ain't just draw this. But this is the area I'm watching on ES, this 4-hour bullish fair value gap. And I agree with you, Keisha. In the chat, I agree with you. But yeah, I agree that this 4-hour bullish fair value gap. So we just got there. That's what I wanted to see. Now it's just a matter of what do price want to do here? What do price want to do here? But ES has the same choppy move up. It's super suspect. So if we flush, don't say we ain't call it, because we seen it coming. We seen it coming. Don't get, it's no blind side here. All right. If we bounce and we keep going higher, of course, I would target the previous highs and so on and so forth. But that's the area we watching on ES. YM, which is the Dow Jones. Important area we've always been watching here on the Dow is this daily SIBI. We watched it here. It caused a rejection. You coming back above. I would say still keep your eye on this area. We could definitely reject it and come right back down. Upper half of this area is actually fine in this context. I wouldn't be mad at the upper half being visited here as it is. That's actually okay. They both have probability. Lower half in this context has probability, and so does upper half. Low-key talking to previous mentees, and hopefully you guys see why it's like painting and premium for real. You know what I'm saying? At the same time, so yeah, so we got the engineered liquidity into a PD rate. We want to see if it could drop off. If not, we'll probably target these highs up here on the Dow Jones. We almost done, y'all. We almost done. Here goes the Russell. When it comes to the Russell, I'm turning B adjust off. For the NASDAQ, for the S&P, and for the Dow Jones on my futures chart, I went to the bottom right and I had B adjust on. When I came to the Russell, I went to the bottom right and I turned B adjust off. Okay. Now it's off, and now I'm about to do my analysis on the Russell. So I wanted to see what price is going to do with this weekly SIBI fiat overlap. It looks like price invalidated it last week. It came above it. Technically, it looks like it's holding the volume imbalance part of it, which is very interesting. Yeah, this is interesting. There's definitely a chance we could reject right here. That would be crazy. I'm gonna have to get back to this ticker with y'all. There's a chance we could reject right here, and just go ahead and make new lows on the Russell. But if not, then the Russell will, I would say, just aim for the highs of March 24th. The week of March 24th, aim for those highs. So if we don't reject right now, pretty much I will go for these highs up here. Let's just keep it light on the Russell. All right, but it definitely is at a crucial area, super crucial area. Let's go CL. We almost done. CL worked out beautifully, y'all. We called this rejection. Beautiful, fire. You love it. We've seen these new lows. B adjust is off on this chart, by the way. Under this, I would just target, I said, let's take it a step at a time, right? Let's go to the next fair value. Let's take it a step at a time. So on a monthly chart, I would target 51.64. 51.64 is my next target on CL. Have B adjust off on your chart. B adjust off for CL. Okay. Let's go to gold. Gold is interesting. I can't wait to talk about gold. All right. So gold is a setup I'm watching super heavy right now, y'all. You guys may remember we targeted the upside here. We remember gold is at all-time highs. So yes, we call targets at all-time highs. We called 32.8. It went above it this time. Usually it hits right at the tick, but it went above it this time. V-shaped reversal, cool. Why is it having a quote-unquote reversal? Because an objective was met. We met an objective. So now that we met an objective, it's time to retrace. When we retraced, I said we're watching two areas on gold. We're watching the 4-hour BISI. Y'all seen how price held it all week. So great PD rate. It just didn't make new highs, but you can see that price referenced it. So we did pick a good PD rate. I also said if it's not this one, y'all, I'm looking at this daily BISI below. So guess what I'm still looking at? This daily BISI below. I'm still looking at that. Now specifically, if I'm being real, I'm looking at this 4-hour bullish fair value gap right here. So Thursday, April 10th at 10 a.m. This 4-hour bullish fair value gap. I'm looking to see gold use this purple area to take us to blue, to take us back to all-time highs. That's basically what I'm looking at on gold. Okay, so we will see how this plays out. This rejection that we're getting is something I wanted to see. There's also a short-term play opportunity, in my opinion, to the downside. I don't think we're done dropping. And if we're going to continue dropping, it is imperative that price rejects the fair value gap that it's rejecting. So you'll see here that gold has rejected the 50% of this. I think it's going to continue to reject this and take us down to the blue. So I think there's a short-term play opportunity just to the downside right here, personally. But gold from this blue area, if I get confirmation back to the upside, and that is if I get confirmation, I'm always waiting for confirmation. I want to target all-time highs again. And so I would take that with options. There's a ticker called GLD, which lets you trade gold with options. GLD. You can take it with futures if you want to, but I want to swing trade this. So I'm gonna take this with options. If gold gets here and I get my confirmations that I like, I'm gonna enter calls to the upside. I'll let y'all know if I'm getting out, but I think we'll run at least to these highs in the middle, or at least come here. So it should be a nice play. I'm looking to see if copper can turn back around here. I'm cool with where it's rejecting. I don't really want it much higher than here. That's actually just funny. That's literally where I have my price alert. Where I have my price alert is where I don't like copper anymore. So I want copper to come to the downside. I want it to come run these lows at the bottom, but it needs to reject like anywhere right now. Honestly, I don't want copper coming much higher than where it just went at. That's where my alert is at. That's the funny part, because that would let me know like I don't like copper no more. All right. No, nothing on the Nikkei. Last two tickets is QQQ and SPY, but we already talked about it largely. So there's nothing different about QQQ than what I said about NASDAQ, being that they're both the NASDAQ. So it's really the same sentiment. Like watching for them order flow shifts to the downside. If not, we keep riding the upside. If both QQQ and SPY pass over this weekly SIBI, then I got them both like low key going to all-time highs. I ain't gonna lie, they both, like, to me, I got them both coming to all-time highs after this. Like if we get a weekly closure over this, I think they're both clear for all-time highs. Safely though, the safest thing you could do on QQQ is target this weekly bearish fair value right here. So that takes you to 513. So if we remain bullish, 513 is a very safe place to take QQQ to. I have a feeling it'll go ahead and run all-time highs, but I'm just saying. All right, and so that's my analysis right there. And so hopefully you guys got a lot out of this. Hopefully you guys got a ton out of the demonstrations I gave. There were so many gems to pick up from that. Shout out everybody for tapping in. I appreciate you guys coming out. If you like this video, definitely like it on YouTube. Subscribe to the channel. Join the live trading. That link is inside of the description box. The free community is in the description box. My Instagram, everything. Holla at me. Join the Discord. and keep God first in your life always. Way more important than these charts. With that being said, it is all she wrote.